Hey, good morning. Hello? Yeah, we're going to keep this microphone away from my voice. Hey, good morning, everyone. We're not going to be too formal today. It should be a relatively informal event, but here's kind of the run of the show. First and foremost, Katie's going to come up and do a welcome. After that, I'm going to ask the author of the bill that effectively started this committee to say a couple of comments. After that, we'll go into my opening comments, and then we're going to dive right into the witness testimony. And we're going to put them under oath and really plan to grill them pretty well. So at the end of the day, with no further ado, Katie.
Keeping it casual. I kind of forgot I was speaking this morning. And so the rest of the day is a work day for me. So I appreciate, you all convening here, and we're happy to host you anytime that you are looking to have any kind of informal or formal meetings. But I do want to welcome all of you to the Metro Atlanta Chamber today. And we're honored to host the first meeting of the House Study Committee on Georgia's investment funds. We always want to thank our elected officials for their leadership and their willing to serve the greater state of Georgia. The Metro Atlanta Chamber, for those of you who may not know, 29 counties, and we certainly play a vital role in driving the growth across this great state. And our mission is pretty simple. It's to unleash Atlanta's ambition. And we do that through growing jobs, through growing investment, and growing opportunity. So we work hand in hand with business, civic, and government leaders to help strengthen Georgia's competitiveness and ensure that our state remains a top destination for innovation and investment. So just a few data points for all of you. Metro Atlanta contributes significantly to Georgia's overall economy. We rank among the top U.S. metros for new business creation per capita. We consistently rank number 2 among the largest MSAs in this country. 70% of Fortune 500 companies have operations here. And what is always important to me is when we look at the Inc. 5000 companies, which these are the scaling, growing companies, we're home to the 3rd highest concentration of Inc. 5000 companies. These are America's fastest growing private firms. And we have consistently ranked at the top of that list for the last, I believe, 5 years. And so I think that's an indication of the strength of our entrepreneurial and our innovation system here, not only in Metro Atlanta, but the state of Georgia. So what drives this success? We have a great airport with great global connectivity. We have a deep pool of skilled talent. And then we have a region here that attracts young professionals who are seeking community, culture, and opportunity. And we're very proud that entrepreneurship is thriving right here, and we're proud to support it. A few other tidbits. We collaborate, the Chamber does, with the leading incubators, one of which is the ATDC, which is, of course, a state creation, as well as Atlanta Tech Village, the Russell Innovation Center for Entrepreneurs, Curiosity Labs, and Peachtree Corners, and many others. And so one of the programs that we have launched in the last 2 years to support scaling stage founders, these are not your, beginning a one-person type entrepreneurship activities, but these are scaling companies who are looking for investment because they're in growth stage. We launched the Atlanta Growth Collective, and it is a first-of-its-kind community for CEOs of high-growth, mid-market startups designed to help them scale with confidence. So we're excited to see the House take a fresh look at the state's investment funds. The Metro Atlanta Chamber has long supported Invest Georgia, in fact, advocating for its creation in 2013. We have seen how it expands access to capital for Georgia-based companies, and we look forward to engaging with this committee throughout the fall and support its important work. So thank you again for your leadership and for the opportunity to host you today, and I wish you best of luck in your conversations. Thank you.
Thank you, Katie. Appreciate it. Now I'm going to turn it over to Representative Kendrick.
Is it on? Okay. Good morning. Thank you, Mr. Chair, and thank you, members of the committee. Briefly, HR 557, which was passed this past legislative session and created this study committee is a lifelong work since I've been elected since 2011. Many of you know the work that I do in the community and the work that I do for my day job. As an attorney, really focuses on helping create investment opportunities here in the state of Georgia. And so I believe that this committee's work is vitally important to make sure that if Georgia wants to stay the #1 state to do business and be the #1 in any industry, we are going to have to attract the private investment dollars here. And whatever the state of Georgia can do to lead in that, I certainly want to be a part of it. So thank you, Mr. Chair.
Thank you, Representative Kendrick. Before we get going and bring up the first speakers, one of the things I wanted to do was just give some context, at least to my thoughts as chair. This will be short. First and foremost, thank you to the Metro Atlanta Chamber for hosting us. We sure do appreciate that. You're always so hospitable, and we appreciate you giving us a place to be able to do this. Second, to Representative Kendrick, thank you for bringing this bill, and also thank you for the way that we were able to work together on the Ways and Means Committee to make this bill, I think, what we wanted it to be. So thank you. To the rest of the committee members, this is, I think, the smallest committee, to my knowledge, this summer. So hopefully it'll be small but powerful. In terms of the intent, I think I want to go ahead and echo Representative Kendrick. We're here to really find out today in the next 2 meetings in terms of what I want to call enhancement. After you have a chance to look at something for a decade, at the very least, you owe it to yourself, to the taxpayers, and the entire state to look back and say what's worked, what hasn't worked, how can we make it better? Is there a possibility that one of the 49 states has a better idea than us? Doubtful, but if they do, what can we possibly do to possibly bring it into Georgia and be better? From a personal standpoint, I will say this: I've had the privilege of starting 7 companies, and there's one thing that I'm noting lately, and I mean lately 5 to 10 years, has really been at the inflection point. So when we're talking, you're getting to about 10 million to 20 million in revenue, you're possibly going to, obviously, growth capital funds, you're going to the banks, you're going to, I'll say, a myriad of different financial sources, because knock on wood, your growth is literally outstripping your cash. And one of the biggest challenges that we're seeing, or I'm seeing, not just through my own world, but also through the folks that I mentor, is, hey, Todd, they love everything about my business, but they want me to do a personal guarantee of $2 million for the $2 million loan. And I don't have $2 million. I put my entire net worth into this business. Any chance, you have a thought on how we can solve that? Guys, that conversation is happening every day. Every day. And in my mind, one of the reasons why Invest Georgia was put together, and I wasn't in the legislature at the time, but it was not just to start them, but it was to gestate them, grow them, and mature them. And keeping them here is the key, meaning here in the state of Georgia. So one of the things that I'd love to be able to go with this committee on our ride together, not just today, but the next 2 meetings, is not just focusing on the startup world, and I'll say the left side of the value curve, but how it is that when we get to that inflection point, capital is not just there, but capital is plentiful within a reasonable, I'll say, set of metrics. So I appreciate everyone's time. Thank you very much to the committee. And without further ado, I think it's going to be, is it going to be Knox, Charlie, and Jacob at the same time? Okay, let's go. Thanks. Do me a favor, just say your name, your title, and then from there, feel free to go with remarks. Thank you.
Okay, sorry, we got to find the right level there. My name is Charlie Thompson. I am the chair of the Invest Georgia board. I have been on the board since inception in 2015, so I've had the benefit of seeing the program from the very beginning. Before I jump in, why don't y'all introduce yourselves and then I'll do the presentation.
Good morning, I'm Jacob Crow. I've been on the board for about 1.5 years. I had a successful career in industry, culminating in building a fintech called Green Sky.
I'm Knox Massey, the Executive Director of Invest Georgia State Program, as well as the Invest Georgia SSBCI program, which is a federal program, and I handle day-to-day operations.
So for context, when I introduced myself, I should have mentioned, so I sort of have two different jobs. One is I develop real estate projects and work with some pretty big private equity firms as my partners who have a lot of experience dealing with large institutional investment funds. I also started ASW Distillery. We're the largest production distillery in the state of Georgia. So I make whiskey and vodka and gin, but again, have experience raising equity and debt to try to grow a business. So very familiar with that from the entrepreneurship side. So going back to the creation of the program, I think it's important to define the problem that the legislation was intended to address. Georgia has done a phenomenal job creating an ecosystem of startups where you have a lot of businesses being created and grown here. But, you know, as the chairman mentioned, for these businesses to successfully scale, they're going to need access to capital. And I think what our leadership in the state was finding was a lot of these companies were taking investment capital from firms outside the state. And especially a 10-employee company is very easy to move. And one of the things that investment funds value add when they invest in these companies is trying to mentor these companies and helping them grow. And so a lot of times they want them to be close by. And so the companies that were starting here were not staying here because they had to leave to go find growth capital. So the idea was to create a program that would consistently support the existing venture capital funds and then also try to encourage the formation of new capital, you know, new funds that didn't exist before, and to increase the total amount of capital available to these startups and help keep the ecosystem growing. And I think we all understand the benefits. You know, if you can keep companies growing here, you think of the amount of the money that the state invests bringing big companies here as a part of our economic development. Well, if you can keep startups here and let them grow here, that's a probably more efficient way. And so if there's more businesses to grow and stay here, then there's more job growth, and we can increase the innovation and competitiveness of our state. So talking about how the program is structured, there's a few things about it that they're very important to understand. So the authorizing legislation in 2013 contemplated $100 million being funded over time. And it designated certain years that would be funded. Well, obviously, the legislature in 2017 may choose to do something different than what the legislature said they were going to do back in 2013. So what's ended up happening is just under $50 million has actually been funded into the program. And structurally, it's like a fund of funds. And so you have investment managers out there in the world that have a strategy for investing. They go raise capital from different investors, whether that be high net worth or institutional investors like pension plans, university endowments, big pools of money. They put it into a fund, and then that fund turns around and invests in operating businesses to help them grow. What Invest Georgia does is it is an investor in the funds. It is not a direct investor in the operating company. And there were a number of reasons for doing that, including constitutionally having the state directly invest in operating business is a challenge constitutionally. And in addition, you know, having the state investing in companies, there can be challenges associated with that. So investing in a fund that in turn invests in companies was seen as a preferred way of doing it. You have professional investors, and it's their job to find and make these investments. In terms of where the money goes, the statute is specific about how the money is to be allocated and the investment considerations that go into it. So generally speaking, 40% of the capital is supposed to go into the earliest stage companies. These are, you know, they have progressed beyond an idea, but they still have a long way to go before they're viable, self-sustaining businesses. Tend to be a riskier investment. And then 60% is to be invested in growth stage companies. And so these are companies that, again, as the chairman described, are succeeding and growing, but they need access to capital to try to scale to get to the next level. So what we have been doing over the last decade is, you know, qualifying potential funds that are out in the market raising capital. We take them through a very intensive diligence process. We have a dual mission. So again, we're trying to encourage capital formation, and we're trying to help grow the ecosystem. It's also intended to be evergreen. And the only way it's evergreen is if we generate positive financial returns. So we are trying to make money. This is not a grant program. We're investing state dollars to generate value for the state. And so what we like to think is that if we determine to invest in a fund, that's a signal to the market that they've made it through a very rigorous diligence process. We try to teach them about, if you want institutional capital, the governance and the conflicts of interest and the policies, all the things that you need in place, and be a good housekeeping seal of approval to the market that they are ready to take the next step and help them raise more money. So from a governance perspective, you have a 5-member board, 3 members appointed by the governor, 1 each, the lieutenant governor and the speaker. You see the commissioners of economic development and community affairs service, non-voting members. We have Knox as our executive director, and then we work with outside investment firms that provide that support. And so you have third-party firms engaging in diligence and evaluation, working together with Knox, and then the board approving every investment. I will tell you, and we can talk more about this, we are the opposite of a passive board. I think we challenge our investment team pretty aggressively, but I'll let Knox speak to that. So just to give an idea, I think the trend line is in the right direction. So you can see over time the amount of capital that we have had invested in the aggregate annually, and then the number of funds receiving that. And so again, over the last decade, we've allocated over $50 million to 18 funds. You'll note that the amount of capital invested exceeds the amount of the original allocation. That's because, again, we have been generating investment returns and reinvesting, which is the goal. So last slide, just to give you an idea of where we are and what we've accomplished. So again, 18 funds. We've invested in the funds in which we have invested, have in turn invested in over 100 Georgia companies, directly responsible for the creation of over 4,400 jobs. Again, as I noted, we've invested 104% of the allocated capital. So that at the program level, that 60-40 goal, we're at about 64-36. So we obviously keep that in mind to try to target the 60-40. About 30% of the capital has been returned in terms of distributions to be reinvested. And from a return perspective, we're at a 1.6x. So for every dollar that we've invested, we have value of $1.60. So just so everyone understands, there's 2 different buckets. So everything I have been discussing is allocated by the state. We refer to that as the state program. In part because the legislature had funded $50 million of the total 100, and that money had been invested. The Department of Community Affairs and Commissioner Nunn came to us. So as part of one of the large federal appropriations, the American Rescue Plan Act, money was being allocated to the states. There's historically been a state small business credit initiative that has been a loan program that's administered by the state. There's also been an equity program to invest in funds and operating companies that the state of Georgia has not historically participated in. I think what Commissioner Nunn identified was the platform you would need to administer this program looks a lot like what Invest Georgia already was on the state side. And so Commissioner Nunn and the state applied for and received allocations from the federal government. Invest Georgia entered into an intergovernmental agreement where we execute the investment of those dollars with our same team. So we have $30 million that is intended to go into funds, same thing, fund to fund, and then $20 million that actually can be directly invested into operating companies. These 2 programs, I would say, the state has the state legislation that its guidebook on how that investment mandate works. Then we have a separate mandate on the federal side. Some things are similar, some things are different. later in the program, when we have some of our fund managers speak, you'll have folks who have taken money from each of the state and the federal, and one who's done both. So that's all for the presentation. Any questions, or if you guys have anything to add?
Gentlemen, do you have anything to add?
A lot of detail, but you did a great job.
Charlie, we good? We good?
Yeah.
Okay. Any questions? Representative Kendrick?
The first question is, can we get a copy of those slides? Because I was trying to do my
Oh,
bit,
yes,
but
of
okay.
course. Of course.
And then the second question is, you said it was a 30% return that you had reinvested. I'm assuming those are like exits, not like distributions of
Those are
royalties and-
distributions that we've been receiving from the funds we invested in. So,
But not full exits, just,
well, they would be the companies, or excuse me, companies owned by funds are having exits,
Mhm.
distributing money to the funds, and then
Right.
the funds distributing back to
right,
us.
okay. All right, thank you.
Representative Evans?
Thank you, Mr. Chairman. Thank you so much. It's always good to see damn good dogs doing great presentations here in the city of Atlanta. I have a couple questions, and most of it is because hasn't really been on my radar, and so I have a little bit of homework to do. I want to make sure I understand. Were you saying that we've got 50 million that's been invested from state budget dollars, and then we have another 50 million that came to us from the feds?
That's correct.
Okay.
So over time, we had about 49.6 from the state that was appropriated in 2015 to 17-ish in chunks. And then, yes, separately, as part of a 2022 federally created program, money from the federal government flows to the Department of Community Affairs. And then as Invest Georgia makes investment decisions, they send the money from DCA to Invest Georgia to invest in those funds or businesses.
Okay. And the thought, oh, sorry, go ahead.
Yeah, so the SSBCI program is much larger. It's a $200 million program allocation from the Fed to the state of Georgia. And there are different options that the state can choose. Most of the money is loan credit type programs. 50 million of that 200 million has been sort of allocated in partnership with Invest Georgia, working in tandem with DCA.
So of that 50 that's committed, 11 million has been invested in funds and about 5 million has been invested in operating businesses. So we're in the middle of investing that money right now.
Okay. And is the thought that, is there ever a thought that the money would go back into the general budget funds, or that it would just stay and churn more investments?
So on the state side, the intent, as I understand the legislation, is the money stays in Invest Georgia, and that, hopefully in 30 years, that program is continuing to invest dollars. On the federal side, our understanding of the intent is the same, is that as we generate investment returns, it stays with the program and can continue to be reinvested. So they're both intended to be evergreen.
And has there been, or should there be efforts to have more funds come from general budget dollars to come into the investment pool?
I would say that is a policy question that is probably going to be the subject of the conversations. I mean, our view has been if the legislature determines to allocate money to us, then we will invest it to the best of our ability, but we haven't pursued that.
Okay. So it's not that you've tried and it hasn't worked. It's just you sort of leave that up to those of us on this side of the table completely.
I think that's right.
Okay. It's a lot of pressure for us. And then my last question, at least for now, and I appreciate appreciate all of y'all being here, is how does someone find out if I've got a company and I want to get investment dollars, what kind of advertising is going on? Is it if you know, or how do we make sure that more and more people know about this?
So on the federal side, on the state side, these are obviously firms that are trying to raise funds. And these funds may be anywhere from $25 to $250 million. And part of the mandate is that a firm that we're investing in their fund has to be based here. So the universe of firms, we're pretty aware of who is out there, you know, particularly having invested in 18 funds and trying to be a part of that community. We are taking some steps. We're participating in Venture Atlanta this year. We're trying to make the world more aware, and obviously website, et cetera. We do an annual report every year that is sent to the governor, lieutenant governor, the speaker, and that we post on our website. On the state side, we have been, on the federal side, because we're now investing in operating businesses, that is a different challenge for us to make folks aware that we exist. So one of the things we're doing right now is trying to get out around the state. We're having a board meeting in Savannah. We're going to swing through Statesboro. We're talking to the folks in Columbus and Athens, really because these different communities have economic development and other programs where they're trying to create opportunities for businesses in their areas to get funding. And so we are trying to physically get out and reach out around the state to make these communities know that these dollars are out there.
Thank you. Thank you, Mr. Chairman.
Thank you, Representative Evans. Representative Franklin.
Yeah, first of all, thank you, gentlemen, for sharing with this. I'm kind of in the same boat as Representative Evans. When I heard about this, I was excited about it because I didn't know much about it at all, and I'm enjoying being on this committee to wrap my head around it to see how Georgia can enhance this program. But so, from my understanding, you're saying that the state gave $50 million, and this was established about 10 years ago, but it was originally designed to do $100 million. Is that correct?
That the authorizing legislation speaks to $100 million, of which 50 has been funded, correct?
And do you know, can you give a little bit of the history of why that didn't happen, or what was the issue? I mean, why that didn't come about?
I would say that the priorities of the legislature presumably changed over time versus what was intended. You know, beyond that,
Political landscape, I guess.
political landscape is probably the right
But it was
word.
happening regularly every year, and then it just kind of died down a little bit.
Well, the first, or you can speak to the specifics of this now.
Yeah, so in the original legislation, there's actually a schedule from, I think, 2015 through maybe 18 or 19. I think it's 10, 10, 15, 25, 35. And that changed a little bit to appropriations on an annual basis. And first appropriation was in, I believe, 15 fiscal year, and then for the next 4 years. And then, as I say, it's sort of above my pay grade why that ended. So.
Sure, yeah. And so the money that was in there, though, I couldn't see the slides so well, but it's a 16 times return on the investment. Was that correct?
So, yeah. So for every dollar we've invested, that dollar goes into a fund that goes into a company, and then those companies are valued over time. So if you take the valuations of all the companies that we are invested in through the funds, we would be at a 1.6x. So for every dollar we've invested, that dollar is now worth $1.60.
1.6. Okay, thank you.
Representative Kendrick.
I had a follow-up question. So is it a requirement that when you invest in the VC funds that they're based here in Georgia, is there any requirement, I don't think it's in legislation, but I'm asking like as a policy, do you look at if the portfolio companies that they're investing in also be here in the state of Georgia?
So there's a couple things. Generally, the funds in which we are going to invest, they have an investment strategy that suggests to us they're going to be looking at Georgia companies. And then, you know, as you very well know, one thing that's customary when particularly a larger investor makes an investment, you enter into a side letter with certain incremental requirements. And one of our incremental requirements is that for dollars we are putting in, they have to invest dollars directly into Georgia companies. So we do it as a requirement. I'd consider that to be the minimum. Our hope and expectation is that they'll do well more than what's in the side letter, but we do have a requirement, which is from the implementing what's in the statute that they invest in Georgia companies.
So historically, we look at venture funds based here in Georgia that historically have invested roughly 30 to 60% in Georgia companies. And so we sort of narrow that down and typically work with those. So we have a very good feeling going into the approval process that they're going to continue that strategy. And then, as Charlie said, at a minimum, they have to invest at least the amount we allocate to them into Georgia companies.
This side later.
I knew you would.
Any other questions from the committee? I have a couple. My hunch is several of them are just going to be for the fund managers, but just for some perfunctory, in terms of the financial oversight, annual audit, once every 2 years audit, what's the audit that we're referring to in the financial oversight on slide 6?
For Invest Georgia?
Yeah.
Yeah, we're required once a year to have an audit.
Once a
We
year.
work with Bennett Thrasher.
And then is that audit obviously against you guys at the top co, but is that also of the funds, or do the funds just provide to you what their audit companies have produced for them and then give to you as a report?
Typically just Invest Georgia, but the funds also have audits and they report those audits to us.
Okay, thanks. And then in terms of, I'm considering you guys the top co, then you got the funds of funds. So what do you, when you're basically making your analysis, what's the dashboard in terms of, hey, this fund is doing really well, and frankly, this fund's dragging a little bit? I mean, I'm sure the first answer is IRR, okay, and I get that, internal rate of return. But is there anything beyond internal rate of return that you guys are looking at?
Well, we're looking at multiple as well.
Could you maybe shed some light to the committee beyond internal rate of return, how you're judging or evaluating the funds?
You want to take this one, Knox, or you want me to do this?
So typically, we look at a lot of different data points. We look at the investment experience of the general partners. We look at the industries they invest in. We look at past performance. Those are probably the top three, and sort of dig into there. And it's always you want to feel good with the funds that you're working with, that they're going to be responsive to you. So a lot of different data points. Those are probably the top three.
From a measured success perspective, I mean, it would again be both IRR and multiple, like how much money are they generating in return? But then again, we're looking at how many Georgia companies did they invest in? Have they helped, keep companies in Georgia, the job growth, the various things that we report in our annual reports.
Okay, couple more questions, guys. On the program metrics, slide 9, the federal money just recently, and the reason I say recently, in investment terms, you've only had it, at most 24 months, probably more like 18 months. Right. So is it fair to say that most of the metrics here are effectively what's occurring with our state money, or is that not a fair assumption from the committee?
Yeah, everything on this slide is state money only.
Okay, this was just
This
state
is just
money.
state money,
Okay.
correct.
Okay.
And then given, to your point, the nascency of the federal program, we're just now allocating money. We have some, valuations and things like that, but we just don't have meaningful returns at this point.
Yeah, I mean, unless you're eBay that did one round
Correct.
in public, I mean, at the end of the day, there just isn't enough time to give that establishment. Yes.
That's right. So the SSBCI program started roughly first quarter of 2023. So we're 2.5 years in. For the funds, that's really early, and we typically, with that particular program, are pushed more down toward the early or seed stage, and so those take 2 to 5, 7 years.
Last question. As you're creating this evergreen machine, and knock wood, it becomes an evergreen machine, as that dollar spits out of the evergreen and you get that distribution, or to Reverend Kendrick's point, that fund, obviously has a huge exit, knock wood, is the placement to that dollar in the same exact process as the placement was of the initial dollars we gave you between 15 and 17?
In terms of process and
in terms of finding the next fund, or maybe it's an existing fund that gets additional cash, et cetera.
Correct.
Anything that changes on that evergreen dollar versus the initial capital?
I guess what I would say is the requirements of the legislation are pretty specific as to how we allocate capital. So if, for example, we wanted to invest that dollar into Series C or D, or something that's more private equity, like, I don't think that fits our mandate as required by the legislation. So yes, I think the considerations for that return dollar are substantially similar to the first dollar.
Okay, well, you triggered me, so I'm going to ask one more question.
Okay, sorry. I'm going to try not to do that again.
No, do it. God, I got triggered by a bulldog. When hypothetically, if the policy mandate was to expand into C and D, maybe even E, given the fact that those are much bigger, slugs of cash that move on an individual transaction basis versus back here, where it's much smaller, have you guys given a thought, and you're not, well, you are being recorded, but there's nothing here that, swears you to anything. Have you given a thought of how we would need to change the policy in order to accommodate, I'll say, that growth strategy at the inflection curve, the 10 to 50, the 30 to 75 in terms of millions of revenue? Have you given a thought to that? And if so, maybe in a short way, give us the color that you would provide us.
You want this one, Jacob? You want me to take this one?
We have certainly talked about that, but only as sort of pie in the sky, if you will. But I think, as Representative Darshan has said, we would have to either add to or take away from the parameters that we're restricted by, and then we'd have to get over the direct invest into a company, and that runs into state constitution issues. So from that perspective, it would be really difficult on the state side, but there might be an opportunity, depending on the rules that are imposed on us by the Treasury and IRS, with the money that comes through SSBCI, that we might be able to take part of that direct money and invest in such a round.
Yeah, for clarity, I wasn't suggesting we go direct. To your point there, I believe it's the gratuities clause that stops us from doing that, but it's still just fund to fund, but expanding the mandate to growth as opposed to, I'll just say, just startup.
Yeah, it's certainly a resource question. I mean, $3 million to $5 million from us to a $50 to $75 million fund, it moves the needle materially. And then just from an investment team perspective, I mean, you would need more resources in the program, I think, to do that effectively. And, again, we're trying to have access to Georgia funds that are doing those deals. There's not a ton of that right now, and obviously the goal would be to attract that, but.
All right, well, thank you. Anything else before? Are we good?
We're great. Thanks for the opportunity.
Committee, we okay? All right, perfect. Thank you very much, gentlemen. I appreciate it. Sean Banks, you're up, and Alan Mosley, you're on deck. Mr. Banks, if you could just introduce yourself, please. Absolutely. And then get going. Thank you.
How about now? There we go. Nice to meet you all. Thank you all for having me here. My name is Sean Banks. I am a partner at TTV Capital. TTV Capital is an early stage venture investing fund based here in Atlanta. We invest exclusively in fintech, financial services, technology companies. We are not necessarily exclusively investing in Georgia, but Georgia is such a fintech hub. We do put between 25 and 30% of our capital into companies based here in the state of Georgia. Sure, absolutely. Okay, so we are $750 million under management. A couple of things that I heard as you guys were discussing, worrying about capital at later stages. We definitely invest very early. We have a seed program that will go pre-revenue. We have a program that's for Series B, A to B. And then when we find companies that we've got that are doing extremely well and moving to that next level, we will go out and raise separate funds, which we call special purpose vehicles, to buy exclusively into a single security. So for example, we have a company here in Atlanta called Greenlight Financial. Many of you, if you have children, you might use Greenlight for their allowance card and their app. Greenlight started here at the ATDC, has gradually moved out of there. When we invested, they had about 2,000 cards out in market. They now have over 7 million out there. We led their Series B and Series C with $30 million and $60 million special purpose vehicles that we raised. Greenlight's original money came from our fourth fund, which was a $93 million fund. Our funds are, and that you guys were the, Invest Georgia was the, we were the very first venture fund, that Fund 4, that Invest Georgia invested in back in 2016. So that $3 million is part of what invested in Greenlight and got us to build a gigantic company here, $250 million in revenues next year, doing extremely well. We also try to bring companies here when we have an opportunity. We've worked hard to foster Atlanta and the state of Georgia as a fintech hub globally. If you hear anything about Transaction Alley, TTV had a lot to do with making sure we raise the profile of the state to become that beacon. And that has brought jobs and that has brought winners down here. Cardlytics, which was a publicly traded, which went public back in 2019, another TTV company. They moved down here from Richmond, Virginia. The founding team spun out of Capital One and was trying to find a place where they could build their credit card marketing program and recognized that Atlanta was a hub for all things payments. A company called FeatureSpace started in Cambridge, England. TSYS down in Columbus, who's a big investor in our fund now through Global Payments, called us and said, we think we've got a very interesting fraud detection solution coming out of Cambridge, England. We went over there, convinced them to make their headquarters in the United States here in the US, and Visa paid $1 billion for them back in December of last year. From that, we have 6 partners canvassing the country. We do like to find Atlanta companies. Invest Georgia has been a wonderful, wonderful stake for us in the ground. They were the very first institutional capital to come in. So when we raised our $93 million fund in 2016, our most recent fund was $250 million because of that institutional capital where we could say we've been vetted. Catherine Burkett kicked my butt like crazy before Invest Georgia Capital came into us. In terms of performance, just overall fund for the first one you all are in has returned about 56% of the called capital, and there's another 3 times your called capital money in unrealized value with a lot of upside. Fund 5 has returned 36% of the called capital. It's got at least 2 times right now with a lot of upside. And Fund 6 has called 66% of the capital, has not returned any yet, but has already pierced through what we call the J curve. So in venture investing, the first 3 or 4 years, expenses are going to outweigh portfolio valuation growth. And so therefore, normally your total value to paid in tends to be under 1. We're about 1.3 right now, and that's about a 3.5-year-old fund.
Thank you. Any questions from the committee? Representative Kendrick?
You said you had 750 million AUM. Is that what you said? Do you remember how much that was when you got your first infusion investment from Invest Georgia?
Absolutely. So Invest Georgia was in Fund 4. At that point in time, we had raised, we deployed a 2000 fund, which was 38 million. A 2005 fund was 80, and then a 2011 fund, which was 40 million. So in total, we were about 160 million of assets under management at that point in time. And just to be clear, that's committed investor capital. The actual value of the funds is a multiple of that.
Representative Evans?
Thank you, Mr. Chairman. First, let me say thank you for the investments in Greenlight. That really is an amazing company. My daughter, who's 13, instead of like trying to save for an Apple Watch or whatever, she is obsessed with her investments because she can watch them every day and see it. And it's just great habits for her, I think, overall. The obsession maybe we need to work on, but it's a good thing to be obsessed about instead of other things that kids could be obsessed about. So thank you. My question is, do you tout to the world that you are supported by Invest Georgia? Is that something that's known?
Absolutely, we do. And we're happy to be references as well for Invest Georgia when there are other firms that are looking at potentially taking money from Invest Georgia. They've been a phenomenal partner.
Excellent, thank you.
Representative, you'll get a kick out of this. My second and my third were doing similar. And I realized at that point their change in personalities. My second, all he was doing was shorting commodities. And then my third was literally investing in the Dow. And I was like, now I know how the two will grow up. One will literally be jumping out of buildings, and the other one will literally drive a Volvo the rest of his life. So yeah, so I agree with you. Any questions? No. Okay, just very quick. When you're marking the market in terms of, I appreciate we're at 3x, 2x, and I'll just say neutral because you're getting through the J curve. When you're marking the market, same kind of strategy that the rest of the funds are using. You're not using anything exotic, right?
No. So a couple different things there. Our funds, with the exception of 4 and 5, but really with the exception of 4, 3, and 4, had publicly traded bank money. So Synovus was a big limited partner because they were looking for access to innovation, because we invest in companies that create bank innovation. So for a long time, we got to have both the federal and state banking regulators come in and actual audit our process for marks to market. So we're extremely conservative about it. We will typically only mark to market up if there is an actual round of financing that prices the stock at something else. We won't go out and try to artificially inflate it for that, because we also have Global Payments. We also have other publicly traded companies that really cannot afford to have us monkeying with valuations to, not fudge, but just performance enhancement, if you will.
No, it's fudging. Yeah. So, but no, I appreciate that. That's great color, because we want to be able to see that it's actual, at least there's a basis for the mark versus, like you just said, looking up at the air and hoping, that the number had gone up. So thank you very much. Last question, and this is just a hypothetical. So if we were to give the portfolio companies that you invest in that are Georgia-based companies a home field advantage. So let me give you just one hypothetical. We create a tax incentive for the Deltas of the world, the Chick-fil-A's, the Synovus, the Thesis, you name it, the whole crew, to basically give portfolio companies that have Invest Georgia capital in them, I'll say a pilot, some type of leg up, giving them a home field advantage over the other 49 states. Material, not material, anything like that? In other words, how do we give these Invest Georgia companies a home field advantage? Because frankly, we want to give them a home field advantage against the other 49 states.
It absolutely would be material. I mean, quite frankly, one of our selling points when we go out and invest in portfolio companies in fintech across the entire country and really globally is our list of limited partners. So it's the Global Payments of the world, it's the PNCs, Synovus's, Pinnacle, Paychecks, and we can get them access. So if you all are able to provide an incentive for portfolio companies to have a leg up with Georgia-based publicly traded companies, then that absolutely is attractive to not only the venture investors, but also to the underlying managers of the portfolio companies.
Okay, think about that. By the way, if you're in here and you're about to come up here, I want to ask the exact same question if you're a fund manager, because to me, we need to be figuring out ways, I hate to say it, but I want to move that mark to market up. Realistically, I want to move our return up. And one of the ways we can do that is say, no, there's going to be a most favored nations regarding Georgia companies that took Georgia Invest money. So let's face it, we want to be able to create that. We have the 8th largest economy in the union. Well, why shouldn't we do that? Members of the committee, any other questions?
Thank you all.
Okay, thank you. Mr. Banks, I appreciate it. Mr. Mosley, you're up. And Mr. Givens, you're on deck. Mr. Mosley, if you can, just introduce yourself, your title, and then go ahead.
Good morning. Thanks for this opportunity. I'm Alan Mosley with an early growth equity fund based here in Atlanta, Nora Mosley Partners. Unlike Sean, who we love what they do in fintech, we're a little more broad-based in terms of the industries we invest. It's all technology or healthcare. Technology typically for us is software, cybersecurity, supply chain are examples of that. And healthcare is not only software, but also tech-enabled services within healthcare. So those are the two verticals that we invest. We describe ourselves, again, as early growth equity. So think about a company that may have gotten seed funding, maybe now looking for that first institutional round of investing. So a $10 to $20 million type investment, time to go increase product development, time to go build out a sales team, a marketing team, and expand from early revenue viability to 10, 20 million of revenue. That's really where we invest. So it's that stage after seed investing. It's venture capital. It's also early growth equity. But these companies are typically still burning money and need capital to go out and grow. That's what they do. We've been in this market since the early 1980s. I've been at the firm since 1998. Went back and looked through the dusty historical documents in our office. We've actually invested over $300 million into companies in the state of Georgia over that time frame, with a good return, well north of $500 million returned on those specific Georgia investments. We do invest across the country. We really don't invest much on the West Coast. I would describe it as Rockies East. But look, we love this market for all the reasons all of us love it. Incredible universities in this market, incredible talent pool moving into this market, great entrepreneurs in this market. And so we're big supporters of anything that can enhance the Atlanta, Georgia ecosystem. We've been very involved in a number of organizations here in this ecosystem. We were one of the founders of Venture Atlanta, which we think has now grown, thank you to the Chamber, and some other organizations, into one of the leading venture conferences in the United States. I was first chairman of Venture Atlanta back 15 years ago, so really proud of what we've been able to create with that, along with a lot of great partners in this market. And that's part of what we do. We have to invest our own time and resources to enhance this market, both nationally and support the companies here in this market. So our firm is really dedicated by vertical. So this is a world where being a generalist is really hard. You have to be really deep, as TTV was just explaining in fintech. You have to be deep in the verticals you invest. So our firm is split within the firm by partners within tech software and healthcare. We have a number of LPs in addition to Invest Georgia that are strategic related LPs. So for example, Wellstar would be one of them that's based here in Georgia. You know, great health system. They're very interested in technology and innovation. They're a limited partner in our fund. And so they're a good partner, and they've been really active in this market as well. So that's a bit about what we do. Our goal is, again, you know, if you can get 2x net plus in a fund over its life, and, you know, we really look at everything on a net basis, you know, we think that's a solid return for the state. This is a win-win. In my view, you invested $5 million in us back in our 2019 fund. I went and looked in companies that are based in Georgia or companies with a very significant presence in Georgia. We've invested about $40 million, so almost 8x what you invested in us. We put in companies that we think are directly related to success and based here in Georgia. We think there'll be a great return on those investments as well. Sean was going through some of the data. We're about 25% distributed in the 19 fund. Gross is around 1.9x nets, between 1.5 and 1.6x net right now. But again, we think there's big upside with those investments. And again, I'd be disappointed if that fund's not north of 2x net. That's what we would expect. You then also invested $3 million in our most recent fund, which we just closed last year. That fund is still held at cost. It's very early in its life. You asked some good questions about audits and accountability. First of all, the Invest Georgia team is really good at what they do in terms of selecting the right managers and monitoring those managers. I know Knox is on our limited partner committee, and he's right there with all of our other significant LPs. Deloitte's our auditor. So there's great management and accountability around the program. And then our job is to go out and find great companies to invest in and support this Georgia ecosystem in whatever way we can. So that's some background. I'm very happy to answer any questions that you might have.
Any questions from the committee? Representative Kendrick.
Thanks for the presentation. I know you mentioned Venture Atlanta. Hopefully Allison is watching. I guess I'm trying to ask, what is there any coordination between Invest Georgia and maybe Venture Atlanta? Because I know that they are really doing some amazing things in terms of bringing different venture capital firms here, and of course their conference always attracts a lot of interesting sort of things that we have going on. So since I think you said you were the first chair of Venture Atlanta, is there any coordination that's going on with, since it's based here?
Great question. First of all, Knox might be better suited to answer that question than me. I'm a little bit dated in terms of what's happening now. I know Invest Georgia has always, its role inside of firms like us is a huge incentive for us to want to be really supportive of these organizations, right? That's through sponsorship dollars. I'm sorry, one of our current junior partners is the current chair of Venture Atlanta. I forgot that important data point, so I should ask Elizabeth. But it's a big part of why we want to continue to support those organizations and give both time and money to those organizations to make sure they're successful. You said you are supporting it this year.
We're a sponsor for the first time this year.
That's great. And what Venture Atlanta did really well is pulling together some disparate organizations that were doing their own thing to really create a 1 + 1 = 4 or 5, in my opinion. And that's what they did really well. Allison's done an incredible job from when she started, hard to believe, so many years ago at Venture Atlanta. But that's one part of a lot of people in this room are big supporters and very involved in that organization behind the scenes. And it's a great event. It's literally one of the leading venture capital events in the United States of America that we started just a few years ago here in Atlanta. And it's a huge draw for this community.
Thank you. It doesn't look like you have any other questions. Let me just do two things. One, Mr. Massey, I think it'd be good for the committee if maybe you could provide to us over the next week just a couple examples of portfolio companies. So I know the 4 funds, they've all obviously invested down. Instead of asking each one of them to go through 2 or 3 superstars, I think it'd be kind of interesting for the committee to get a matrix, maybe do who the portfolio company is, who the fund is that invested in them, and maybe give us some color, not just return color, but maybe something along the lines of jobs created, tenure, things like that, so the committee can have a really good understanding in terms of those portfolio companies. Would that be okay, Mr. Massey? If you could, we sure would appreciate it. I'm not going to have you answer the same question that I asked about the home field advantage. My question or my request would be, take some windshield time, take a week. But if you come up with an idea that, I'll say passes the straight face test on how the state can give a home field advantage to those portfolio companies that are based here and are taking Invest Georgia money, I think the committee would be very, very interested in turn how we could incent that. And I want to be clear, not just with our public companies, but, Waffle House and Chick-fil-A are huge ecosystems and they're not public, as you know. So we want to be able to not just incent the public companies, but also incent the larger private companies to want to, I'll just say, give a leg up to a portfolio company that's based here and took funds that were originated from the taxpayers of the state of Georgia. Would that be okay?
Absolutely. And we'll also poll my partnership and talk about some different ideas we could come up with.
We would appreciate that. Thank you so much. I appreciate your time, sir. I want to go ahead and break the committee for 10 minutes. I didn't realize in the agenda there was a break. So we were just kind of moving along, and then I looked down and I realized, oh, it's 11 o'clock. There's supposed to be a break. So if we can, out of the just respect for everyone, I think we're going to be able to move through this before lunch, which I think would be good for everybody. So if we can absolutely reconvene in 10 minutes, it would be appreciated. Thank you so much. I didn't look at my agenda. Hey, thank you, everyone. Mr. Gibbons, if you can, just introduce yourself, what you do, and then go. And then on deck, and I believe our anchor leg is Jamie Hamilton.
Awesome, awesome. Cutting the break 1 minute short. So my name is Barry Givens. I'm one of two managing partners at Collab Capital. We are a early stage venture fund here in Atlanta. Our first fund was $50 million, and we just closed on a second fund of $75 million. So right at $125 million assets under management. We're early stage. First fund, we did some pre-seed investing, pre-revenue. Second fund, we're mostly focused on seed, and we're kind of branching up into Series A because there's a huge gap. We won't do a lot of Series A investing because our fund's not big enough, quite frankly, but we do want to take advantage of well-priced opportunities when they are put in front of us. Our fund is focused on three different areas. So we focus on the future of health, kind of with a focus on access and quality. The majority of our founders are underrepresented founders, and we believe that many of the things from a healthcare perspective are that they experience these things at a higher rate, which means they have a different viewpoint and experience on how they can have solutions to these problems. And so we try to invest in founders that have the closest proximity to the issues that they're solving. That's one of the criteria we look at before we write a check. And so access and quality, and three areas that we found that we call fast moving water are mental health, women's health, and elder care. With the aging population here in the country. And so those are three areas where we found a little bit of success. The second vertical that we focus on is future of work, kind of with a focus on economic mobility. And that can be with access to capital, whether it's entrepreneurship or if it's on an individual, just kind of changing the access and opportunity they have from a work perspective. And so really anything that's moving an individual through and over that wealth gap to get them on the other side. And then the last is more broad. We coined it community infrastructure. And these are things that any community just needs if they want to thrive. You go into rural areas and access to broadband may be an issue. Access to different medical, it falls a little bit under future of health, but access to clean water and healthy foods. And anything that is a baseline that actually started off as future of learning in our first fund. And what we realized, there's so many determinants that decide whether or not a child will be successful in school before they ever step foot in the door of that school. And so we expanded our future of learning into that community infrastructure to deal with some of those more structural issues in the communities. And so fund one, we are fully deployed. We made 38 investments. Fund two, we are now 10 investments in. I actually have an investment committee or a closing call to write $1.5 million check at 1:30, I believe, right after this is over. And so we're 10 investments through with fund two. And so around, where are we at now? Around 40, 50, around $55 million, of which around 15 million of that has gone to Georgia-based companies and through around 15 investments. And those companies, like I said, they're a little earlier, but they've still created hundreds and hundreds of jobs, not quite to the thousands yet, but we'll get there. But hundreds of jobs here in Atlanta. And that's the fund. And now I'll talk more about and I believe the other distinction is that, not correct me if I'm wrong here, we do not have Invest Georgia money. We have SSBCI money. So we're on the SSBCI federal side, which is a little bit different than just the direct state money. But obviously still from a macro perspective, still has a huge opportunity to allow the region and the state to continue to grow the way it needs to grow by giving funds like ours access to that capital. And so I want to move to a little bit of personal. I know I talked about just who I am and what I do, but I was a founder first. So Georgia Tech grad, and built my first company in ATDC along with my partner Jewel, built her company in ATDC. And I want to just get to it. I know you stole my thunder on some of this, but get to solutions and things that I think about all the time, things that keep me up at night as where our founders typically find that valley of death. And I know we talk a lot about funding, but one of the big things, if we cannot, I know this is about bringing capital to the state, but we have a lot of capital in the state in the sense of customers for our startups. And there's a lot of money outside the state that we could go get if we had better customers here in the state of Georgia. A lot of times it's hard to go to an investor in New York and raise money if your 5 key customers are in Atlanta and none of them are on your deck as signed customers, because you can't even close anything at home. And so I know you mentioned kind of tax incentives and things of that nature. And I think for me personally, my first startup, I was trying to do a partnership with Coca-Cola for years. I don't know if we can say names, I know this is recorded, but there was really no reason for Coca-Cola to work with us other than the fact that I wanted them to work with us and I was selling them, but every startup is selling them that they'll have an economic advantage for that company. But there was no unfair advantage for us to say, why should Coca-Cola work with us? The same thing for my partner with Home Depot. Both of those companies have now released products similar to ours, but there was no incentive for them to work with us versus either build internal or go somewhere else. And I do think that offering some level of an incentive, we've seen it done with film here in Georgia. We see it done on affordable housing here in Atlanta with the tax allocation districts, where we're able to be creative and find ways to move capital that becomes beneficial to the larger dollar companies that are involved. And so any way that we could have a corporation, whether they invest or become a customer of a Georgia-based company or a company that was invested in by a Georgia-based firm, be able to look at that investment as a way, if they receive any multiple back on that investment, that there is some type of level of tax break on the state side that makes them want to give dollars into funds or want to give dollars into individual companies. And then I believe using the state, we're doing this now a little bit on the city side. We just launched a program where startups that are based in Atlanta can actually pitch to the city and have a direct line, if you're based in Atlanta, to pitch to Donnie Beamer, who's the senior technical advisor to the mayor, to get in front of the city as a customer. Because a lot of times we focus so much on capital that we forget that making money is the original goal of a business. And so if we can get more entities like the state or the education side, if we can get schools to buy in, and that's, if you look at how other ecosystems have survived or thrived, it's that the whole ecosystem is a part of that growth. And so it's talking to customers and schools and governments, to, entities, to reduce sales cycles, to increase the amount of capital being spent as a customer, which then makes it easier for that same corporation to jump in as an investor because they see the upside as an investment, which then makes it more likely that a large company is going to buy. So it's kind of this ecosystem. And that's why we named our fund Collab Capital, is because we believe that collaboration is truly what we have here in Atlanta and Georgia that no one else has. The future, the Fortune 500, Fortune 5000, that is something that is very particular to what we have in the state of Georgia. And right now we are not using it to our best ability. Instead, we're trying to compete with where other people outpace us, which is capital, when we're not using the resource that we have here to the full advantage. So I'll stop there, but she wanted to put couple of my thoughts on the table.
Thank you. I appreciate that. Any questions from the committee? Representative Kendrick?
Well, more like a comment. So thank you to you and to Jewel. She's been very, very helpful, because I particularly have a passion for helping emerging fund managers. And I know there's some federal legislation that is, well, it's the federal government. So it's taken a little bit of a while. So thank you for the work that you do, and that she has been very, very helpful with it. I guess I do have a question. And somebody else mentioned this, and I don't remember who, but in addition to, sort of what we're talking about today in terms of capital, a lot of times what I hear from either clients or constituents or just people is that there's not a lot of like mentorship going on in Atlanta. And really, if we could help some type of way in helping like get companies into the supply chain. Like I know the Technology Association of Georgia has a program where they help companies get into the supply chain. But is that similar to what you just mentioned in terms of not only thinking of solutions about bringing capital, but also using sort of non-financial ways to get companies to scale here in Georgia?
So I wouldn't use the word mentorship. I think that we have a lot of mentorship available, whether it's a lot of the accelerator programs we have here that have done really well, the incubator spaces like ATDC, like ATV, and the others. What I'm talking about is more tactical. I have a company right now, well, two companies here in Atlanta, Hairbrella and Gooder. Both are phenomenal companies. Hairbrella is going to go on to, she's growing 200, 300% year over year, is going to go on and do probably 10 to 15 or 12 to $15 million in revenue by the end of this year. And and she sells to individuals, but if we could get UPS and Delta and some of these larger organizations to become corporate clients as well to a company that is already growing and thriving, that makes it that much easier for us to go out and get a large Series A. Companies with the metrics that she has right now would be raising at $100 million valuation. We're now holding Tracy on our books at $12 million value, and she's going to do $15 million in revenue this year. Similar to Gooder. Gooder has been at $10 million for basically the last 3 years and has become stagnant because she cannot raise a dime. And if we could get every single corporation in Atlanta to not only be a customer, they also get tax breaks through her technology, save money, but they're also reducing CO2, landfills, all these positives. But that would also help her go out and expand to other cities. And so what I'm saying is more tactical in that we have these companies right here in Atlanta and they're hitting this stagnant growth because you need money to grow. And if you cannot get said money, you kind of hit this point. And that's what I'm saying about all the different companies that exist here in Atlanta. We have the ability to force our position to create that growth for these companies that are based here. And now Gooder goes from a 50-person company to a 2,000-person company all over the United States.
Any other questions from the committee? Representative Evans?
Thank you, Mr. Chairman. And I, you just triggered me. We talk a lot in the legislature and in government about how do we, we have the tax breaks and we have sort of the attraction incentives that the Department of Economic Development works, which is all these are great things. But I hadn't really ever thought about what you just said, which is how do we encourage without being too involved, because then we're doing what everyone says government shouldn't do, picking winners and losers. But but when it's our state, how do we incentivize other big Georgia players, businesses, to not invest in necessarily, but buy from peer-to-peer? And it reminds me of something that I think the Georgia Chamber may have done. I'm looking around to see if anybody knows what I'm talking about. I feel like the Georgia Chamber last year or the year before sort of had that like buy Georgia. It seemed like it was something like that, some sort of peer-to-peer in state to in-state. And so I guess to the homework list that the chairman's already given on how do we sort of give the home field advantage, and I was thinking of that as tax breaks and things like that, but just add this to the list. Like how do we incentivize without being too heavy-handed by Georgia, I think is what you're saying.
Exactly. And I'm not smart enough on the policy side to say how to do it. I'm just an entrepreneur that comes with a lot of crazy ideas and hope when you throw it against the wall that it sticks.
That's how it works. That's how it starts.
That's typically how it starts. But there has to be a way that we can incentivize, and I'm not sure if it's focused around, the fact that companies are based here, so it's not quite you're picking the winners, but if you're investing in Georgia-based companies by giving that incentive to consumers or customers of Georgia-based funds or Georgia-based like Invest Georgia or CLAB or any of the funds, I think there has to be a way in there that you can do it and do it legally. But I think one other thing is that this is an attraction tool. One of the things that is not talked about a lot is that many of these other ecosystems did not grow from within. Many of them, Georgia Tech is the #1 importer of talent into Silicon Valley. Silicon Valley would not be Silicon Valley without Georgia Tech engineers. And so we also, by creating these particular types of programs, we convince the best companies, startup companies that may not have been built here, but we convince them to come here to continue to grow. And so I have a company now named Digitize in New York that I have done everything I possibly can, giving them all the money I possibly can, getting them to Atlanta, I think this company is going to get too much on, 'cause I know this is public, but this company is going to be really, really big. And having incentives to bring them here to help them say, hey, we're going to get you customers in X, Y, Z. That's kind of the last step that I would need to get them to move here. And so also by having some of these programs, not only could we build from within, but we can also bring the best talent, because all they're looking for is the best place to grow. What's the most fertile soil? And we just have to create these programs to create that fertile soil for people to want to also move here to build the next biggest companies.
Representative, you good? All right. Well, Mr. Givens, I appreciate your time. Very quick question. Of the two funds, you have 125 million committed. How much federal dollars moved in from Invest Georgia to you?
5 million.
5. Okay. Thank you so much, Mr. Givens.
On the second fund of the 75.
5 of the 75.
Yep.
Okay, great. Thank you so much, Mr. Givens. I appreciate your time.
Thank you.
All right. Mr. Hamilton, you're up. Please introduce yourself and then you can go.
Okay, well, once again, thank you. Thank you for this opportunity. It's a pleasure to be here. My name is Jamie Hamilton. I'm the managing director of Atlanta Seed Fund. We are in our second fund with a 20 million target. We're still fundraising, but we'll get probably $18.5 to $20 million in Fund 2. As our name implies, Atlanta Seed Fund, we're typically seed stage investors. We will branch out, and we certainly reserve capital in our fund to invest along other funds in the Series A, but we're probably, of the panelists that have come up here, we may be the earliest. And I've heard a lot of buzzwords today, buzzwords that I like and that I use in ecosystem. And I think ecosystem is a strong word, but it always makes me think, what makes a healthy ecosystem? And you certainly take it places like the state of Georgia, Atlanta, Savannah, Valdosta. Well, we got pockets and we have all the recipes here. But you look at some of the big names that you see, whether it's Silicon Valley, whether it's Austin, Texas, whether it's Boston, Massachusetts, and they have certain things, I think, that are constant across those. One leg of the stool, if you will, is you have institutes of higher education. We have that at Georgia Tech. We've got a phenomenal school here. We have Emory, we have University of Georgia that's becoming very active. SCAD, I mean, it's tremendous. The next thing you need is that entrepreneurial spirit. I went to Georgia Tech. I graduated in 1993. I barely got in and I barely got out. And I saw there a ton of people that were much smarter than I am, much more dedicated than I am, and they just bright. I just wonder if they had the opportunity to do something themselves, what they could have done. Instead, they went to work for Boeing, or they went to work from the big companies. That is a sea change right now. My office is directly across the street from Georgia Tech. I'm in Midtown, I'm in the Tech Square. And the entrepreneurial spirit that I see just there every day is tremendous. So you take the ecosystem, you take the access to talent, you take the entrepreneurial spirit that this generation seems to embody. The last leg of the stool that you're finding yourself is access to capital. Now, I made my first technology investment in 1998. It was a Georgia Tech-based company. It turned out to be successful. But I've been around long enough to see this ecosystem start growing. And at that time, there was hardly anybody outside of some bigger name funds, and still only maybe a handful of those, that were supplying capital, especially at that earlier stage, to businesses. And I just fell in love with it. I fell in love with working with the entrepreneurs. We're a small fund, yes. I get the question, are you specific to a certain industry? The answer to that is no. In fact, I'd like to say that we're really more stage specific. In other words, whether you're a fintech company, whether you're a healthcare IT company, whether you're a B2B enterprise SaaS company, at the stage that we're generally investing, there's a foundation level of work that needs to get done, that needs to be built in place, that's hopefully going to allow for that scale over time. But it doesn't really matter. It can be agnostic. Now, as that company grows and as it starts to mature in its life cycle, yes, I do think it makes sense to partner up with an investor that is very focused on maybe a certain industry that can provide that leg of work. But as you go back to the ecosystem, which I will here shortly, it's access to capital for us too. with our fund size, and I'm just speaking of Atlanta Seed Fund, it's hard for us to attract traditional institutional capital. In other words, we're a small fund. Most funds, including Invest Georgia, and I should mention right now, our Fund 1 was a recipient of dollars, state dollars from Invest Georgia. Fund 2 were recipients of SSBCI. So I've got Fund 1, which is straight Invest Georgia state dollars, and then Fund 2, which is, but our fund it's difficult. Most institutions will say, well, we've got a $5 million minimum or a $10 million minimum. And oh, by the way, we can't be more than 10% of your fund. Well, if I'm raising 20 million, that just throws me out right away. But Invest Georgia, it was tremendous. They invested in our first fund. In the process that we use, learning from both Catherine, who's sitting behind me, and Knox was just absolutely incredible. The diligence process that we went through, that led to Georgia Tech Foundation. So the Georgia Tech Foundation came in, they did their exhaustive diligence, but the work that I had to go through working with Catherine and Knox on Invest Georgia was tremendous as we started to attract more of traditional fundraising from, say, Georgia Tech Foundation. It's our hopes that those two doors, Invest Georgia is going to continue to open up even more doors on the institutional capital side. But any healthy ecosystem, and I want to pay attention to some of your comments earlier about the later stage investment. You need allocators or people putting money to work across that spectrum, right? It doesn't help if you're going to have no early guys, but you do have a gap maybe up on the growth side, the true growth side. So I typically, and this is a little bit of old school, money coalesces around money. And that's true to me. If the state can somehow find a way to continue to put and help funds and help others put dollars at work, I think the recipe that we have here as far as the ecosystem is tremendous. We're going to ride a growth curve right now with AI, with everything else, combined with the entrepreneurial spirit, and I think it's going to be tremendous. I think 10 years, you could look back now and say, holy smokes, remember when we were sitting in that room in downtown Atlanta in the 191 building and we talked about this? That's the power of what's in front of us right now. I've been in it since the mid-90s. I've seen the ecosystem. I've seen the state of Georgia. I've seen Atlanta grow. Right now, I've never been more excited. But we're early stage investors. That's where our bread and butter is. That's where we're going to continue to focus our time and efforts. We want to find the best early visionaries that we can, back them. We take a very active position. We're a minority investor as far as the fully diluted cap table is concerned. But we put provisions in place that we want to be at a board seat. We want to be there at the strategic meeting. That's how you win here. That's how you, I think, really foster, understand what that company needs. Who do I know? Who's in my expanded network that we can know that can help introduce them to other companies? So I'll open that up with any questions. But once again, thank you for your time.
No, thank you. We appreciate it. Any questions from the committee? Representative Evans?
Thank you, Mr. Chairman. And you may not know the answer to this, so maybe someone in the audience does and can tell me later, because you bring up a great point. It's not, you need people early, you need middle, you need late. And I would be interested to know what our Invest Georgia portfolio looks like as far as funds that are along that spectrum. I don't necessarily need to know right now, but I'm just curious in the long run.
So
Oh, great. Oh, right, I remember seeing that now. And I guess, though, it sounds like there's a more granular division of early and late. There's early, maybe there's early.
Miss Evans, that's exactly right. And largely, I'm speaking to Georgia. I mean, the name of our fund is Atlanta Seed Fund, playing off seed capital. But as you're well aware, you can read about, I mean, there's seed deals that get done in Silicon Valley that are $30 million, right? We don't see that very much here in the Southeast, certainly in the state of Georgia, in Atlanta. So the geographic plays a little bit of a role in that. But I do think that as companies are considering moving to Georgia, as they're considering to launch their enterprise here in Georgia, it's working with the right investor that can help really add value in addition to the capital, but the human value and the resources that can go along with that at each stage. We recognize where we can hopefully provide an impact, and we also recognize where, quite frankly, we may not be the best investor. In other words, if we help a company go from $1 million in revenue to $4 million in annual revenue, it makes sense for that company to launch a growth raise of capital. We may not be the best investor for that company to put, not just on the dollar value, but that company's going to face issues and in trials, tribulations that we're just not accustomed to seeing as someone who really works with the earlier stage businesses. So having that ecosystem and access to capital across that spectrum, I think, is very, very important.
Thank you, Representative Evans. I believe you got out with just one question. I sure do appreciate your time.
Well, I'd like to, if we have time, I'd like to comment on the question you've been asking everybody, and I'll just go ahead.
Home field advantage?
Well, yeah, I think it's a home run. I've said a long time, and this is not a fault of anybody. It's just what's been traditionally understood. When you drive down I-16 and you see Hyundai plant, and you're about to see Rivian come out of the ground heading towards, Madison. Those are tremendous. They're tremendous for the state, and I'm certainly welcome them and glad they're here. They bring jobs, but in the aggregate, look at what some of these startups can do. When we're generally investing in companies, they're 5 to 10 people. By the first year, they're 15 to 25 people. And the jobs that they're hiring in these roles are the types of jobs that are perfect for the state. They're high-paying jobs. Everything along that. But, you do that times 20, 30, 40 different startups that are each growing from 10 employees to 50 employees to maybe 100 employees, and you add that up in the aggregate, you get a Rivian or you get a Hyundai, right? So specifically to answer your question, I don't know. I look forward to giving that some thought and hopefully getting back with maybe some suggestions. But I think it's an absolute home run to at least be thinking about that way to, what can provide a leg up.
Thank you very much. I appreciate that. I appreciate the reference to home run. Our Braves have been having a little bit of a tough time this season with those, so it's good to hear the word again. So thank you. We have come to the end of our agenda, so I'll ask the committee. Oh, sorry, John.
You mind if I make
Go right ahead.
Thank you. Two things about the ecosystem. One for you guys to know about, and then two, maybe a suggestion for something to look into. One of the attributes that the big markets have that have advantages over Atlanta is their big public and private institutional investors are investing in businesses there. In here, there are some challenges with that, but I want to ask Knox to talk a little bit about Engage, just so they're aware of that program. And then, Catherine, if you can talk for a minute about the structural constraints of Georgia's pension programs investing in funds, because I think that would be interesting for them to understand.
So Engage Ventures is based in Midtown, headed up by a guy named Blake Patton. And Blake worked with Marty Flanagan and Bud Peterson starting around 2016 and put together a sort of an experiment which was called Engage One. And that was a fund that was $15 million in size. I've known Blake for 15 years or so through the ecosystem here, and we got together early when Invest Georgia was just booting up to 2016, 2017, and we were an anchor investor in Engage. And Engage has gone on to raise Engage 2, Engage 3. Engage 1 was 15, Engage 2 was 30, is that right? 45, and then that's Engage 2, and then 3. And subsequently, so Engage 1, Engage 2, Engage 3, he's now been able to raise another fund called Tech Square Ventures, which we were an anchor investor in, and that was $75 million, and he's now moving on to Tech Square Ventures. They call it Fund 3, but he's trying to raise $100 million. So we were anchor in Engage 1 and anchor in Tech Square Ventures 1. And that's important because it's a collaboration between Georgia Tech and the corporations. One of the issues that Jamie and Alan and I have always sort of struggled with over the last 20 years is getting the corporate investors involved. That was the holy grail. And Engage has essentially figured that out. So their anchor LPs, along with Invest Georgia, are some of the top blue chip companies here in Georgia. And what they're doing is teaching the corporates about venture capital and private equity. And it was an experiment in 2016, and I think in 2025 it is a raging success. So that's something to look at. And I was even going to suggest that at the next meeting, if the committee would like, is you talk a little bit to Blake and maybe Scott and some other people there at Engage and Tech Square. So it's all the same aggregate company or partnership. So Chick-fil-A, Georgia Pacific, better not do. Yeah, Home Depot, Cox. I mean, all the ones you recognize. Yep.
Okay. Structurally, in 2013. Hi, I'm Catherine Burkett, and I work with Invest Georgia on the diligence. I, at one time, was at the Georgia Pension. Just shortly after the Georgia Pension was ordered to invest in alternative investments. And they took it upon themselves to write their own guidelines for that investment. And they, for one thing, did not want to invest in any fund that was under 100 million and that did not have 5 like-minded institutional investors. So that made it very hard, has made it very hard for funds like Jamie Hamilton's Atlanta Seed Fund, or even for CoLab when they were first getting started. There was not going to be any money from pensions. Money from pensions is often one of the starters for different states to start a program in alternative investing. Certainly happened in Silicon Valley because the CalPERS is huge, and they have been enormously supportive of emerging managers. So we don't have that here. So I think that's what Charlie wanted me to tell you.
Well, thank you. I can vouch for that. A company I was on the board of that we sold, CalPERS was the initial investor, and it pretty much was a springboard for everything. So I get that completely. From the committee side, if there's not any closing comments from anybody? Go right ahead.
I just want to thank all you guys again for coming, and I always have more questions than I start off with all the answers that we get, and so I think that we're going to leave here with some ideas of what to do we go forward. But one of the things I'd like to do or like to know about is, I think we all here want to see how we can expand this to bring more businesses in Georgia to have that brainstorming. But also, I'd like to see, and we talked a little bit about this, about how, if possible, that we could expand this into the rural areas of Georgia, because that's I understand Atlanta and Augusta, even my area, southeast, Georgia is booming, and we've got some investment there. But Southwest is just that's where my grandmother was raised and all that, and it's just not the same. And there doesn't seem to be many answers, and I would think it would be tremendously hard, in my opinion, to get businesses to go there. So if that's a possibility, I think it'd be interesting to investigate. Maybe not, but I'd like to see that if possible.
Thank you, Representative Franklin. Anybody else? Representative Evans?
Thank you, Mr. Chairman. Thank you, everybody. I thought the presentations were fantastic. I learned so much. But Catherine, I think you stole the show for me, because that was just ding, ding, ding with the pensions. If other states are leading the way in building those markets, why shouldn't we? And so one other piece of homework, if somebody already has this, if somebody could get it, maybe our committee staff here could get it for us.
Look at him. He's warming up already.
I would love to know. I mean, I don't know that we necessarily need a 50-state survey of what the pension rules are for alternative investments, but at least those states that we would want to be like, those markets that we want to be like, I think it would be really good to know, and it might help some of the more, and I don't mean conservative in an RD way, but conservative on investment way in the retirement committee, because I think that's where that would probably end up. And I think there's a lot of education that probably needs to be done about what these other markets are doing. So that if we don't do anything else, we would have hit a home run, I think, if we could figure that out.
Thank you, Representative Evans. I think you're spot on. Just a couple of things. I do appreciate David here. He is our analyst for the committee, and based on his notes, he does have a lot going on. Make sure we get Knox's recommendation on Engage. Did you get that? And we'll make sure that we get Engage in here on the next two meetings. To Representative Franklin's point, one of the things that we're going to be talking about over the next two meetings is effectively the idea, and again, another hypothetical, just like the home run or the home field advantage. What if we were to have different analysts scouring the state to effectively bring deal flow to the funds that Invest Georgia invest in? So for instance, if we were to have folks that were down in Albany, as they call it, not Albany, but also down in Brunswick and Camden, you name it, in Lanier County and Eccles County, but, really across the state, bringing up, because we get it, not many of the funds have either the bandwidth or frankly the time to be able to hop to 159 counties and find out some of the very cool things that are happening. But I think maybe if we brought a little funds to them, things would be good. So maybe that's something else that we need to hypothetically be thinking about in terms of bringing the funds or bringing the opportunities, the deal flow into where the money is being held. So I appreciate that, Representative Franklin. With that stated, I think that we're in good shape. It's 11:48. We're ahead of time, and there's nothing better than adjourning ahead of time. So unless I hear objections, we're adjourned. Thank you so much.